The Japanese yen has lost about 15% of its value in the last few months, mainly because of the elections, both leading up to and in the aftermath, where their policy is to try to create inflation, deliberately create inflation, weaken the yen, and try to cause more spending in Japan, as if that's the solution to their problems. It's not. It's going to create an even bigger problem for Japan. But, of course, it's going to create a problem for us. Because if the Japanese government is successful at pricking the bubble in the Japanese government bond market, because you've got all sorts of savings in Japan in very low-yielding Japanese government bonds. If the Japanese want to get rid of their bonds now because they believe that inflation is coming, and with a 15% drop in the yen, gas prices, food prices are really going to shoot up in Japan. And if the Japanese are going to be spending money and not saving as much money, if they're going to be buying stocks or sending their money abroad to escape a weakening yen, the Japanese central bank is going to have to buy more of these Japanese government bonds. And if they do that, well, they're going to have to buy fewer U.S. treasuries. They might even have to sell some treasuries. I don't think they could buy the JGBs and the U.S. treasuries. They would have to print way too many yen, and especially since their deflation problem, which was never a problem, deflation is a benefit, and they never really had falling prices. Japan had stable prices thanks to a strong yen, but now that they no longer have a strong yen, they're going to get rising prices, and they can't make them rise too fast. So I think if the Central Bank of Japan has to choose between monetizing Japanese government debt and monetizing U.S. government debt, well, they'll go for their own debt. And that means, we're going to have a bigger problem because if the Japanese aren't buying, that means the Fed has to, print even more money. The Fed minutes just came out yesterday, and there was some discussion about maybe not continuing to do $85 billion a month in QE, maybe stopping it before the end of the year. That caused the dollar to rally, gold to sell off. I think that's a mistake to jump to that conclusion because they might be talking about raising rates, but they might be talking about ending the QE, but that's just talk. They can't do it, especially since we averted the fiscal cliff. We've got even bigger budget deficits now, and if the Japanese aren't going to fund it, I think the Federal Reserve is going to actually have to increase the size of the QE, not end it early.
So the Fed putting this out that they could be stopping QE, wouldn't the whole market just immediately, boom, crash just like that?
Yeah, they're not going to stop. In fact, they're going to actually increase the size of these bond purchases, not only because the Japanese might buy fewer bonds, but because the deficits are going to be bigger. We just canceled all the tax hikes, except for just a small fraction of Americans, but the majority of the tax increases were canceled. The spending cuts were canceled. And so the deficits now are going to be much bigger than what they were forecast to be, which means the Fed is going to have to buy even more bonds if it wants to stop interest rates from surging. And, of course, that's what the Fed wants to do. The Fed is trying to prop up the economy, prop up the housing market. And if mortgage rates starts to go up, that's going to clobber the housing market. So the Fed is going to have to buy. Anybody who thinks the Fed is going to voluntarily stop the presses early doesn't understand the precarious nature of the U.S. economy. They actually think that we can have legitimate growth without all this cheap money. The minute you take the cheap money away, the phony economy that is built on a foundation of cheap money is going to crumble.
Yeah, so last week when gold took a big hit, you're long term, you're like cool hand Luke. You're like, no worries, buy, right?
Absolutely. You got to buy any dip. Look, we've been in a bull market in gold for about 12 years. This is not the first time gold's gone down. Gold keeps going down. But every time it goes down, if you would have bought it, you would have done well. It's the people that keep urging people to sell gold. I bet there's a lot of people that are shorting the drop in gold. They've been shorting for a while. They think they're going to lose money because I think we're going to make new highs because they're going to keep printing money. Politically, that's the only choice they think they have. They can't tell the truth. They can't let the public know how broke the government is, that there is no free lunch, that big cuts have to be made in government programs, they want to pretend that everybody can get paid, that the government can keep all its promises. And all they can do is print money until people figure out the promises are worthless because the money is worthless.